What's up guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be a quick mortgage rate update. We're not going to do anything else, just get straight to the point. Now the point of this videos are always to make sure you get the best rate possible and to always let me compete with big banks or big real estate companies, because that's what I do. And I'll go ahead and towards the end of this video, I'll flash up the rates that everybody else has versus the rates that I have. My whole mission is to go ahead and save people as much money as I possibly can, give you the best rates and have no additional inflated costs associated with mortgages. That's what we do YouTube for. Free advertisement, taking on those big banks. Let the little guy try to get a gnaw at those big bank sons of guns. They're actually really cool people. But rates are rates, money is money, and it is what it is. So first things first is we're going to go ahead and look at the 30-year mortgage-backed securities. Mortgage-backed securities, what it just means, it's a bond. It's a debt that people buy, sell, and trade on the stock market. It actually is taking a total downtick for the course of 52 weeks. It had a little bit of an uptick, but it's still relatively low at 99.66, trading at 99.66. It's going to go a lot lower, especially as of July 27. July 27 is going to be the next Fed rate hike. So Jerome Powell, he's going to go ahead and hit us. Depending on how much he's going to hit us, that's going to be depending on where the real estate market is going to take a shift to in the coming future. It all depends on exactly where mortgage rates are. If anybody, and I hate it, you know what I hate is real estate agents who think that they know about the market. Fucking agents, god damn it, they are not allowed. If an agent ever says, oh, you know what, this is a bad time to, this is a great time to buy a market, or in the 90s, I went ahead and bought my house at 11% and then I sold it for X amount of dollars. No, you asshole, that's not how the world of real estate works. Right now we are at the highest price point with the highest interest rates. So the cost of buying money is at the highest it's been in the last 15 years. Home prices weren't the same back in the 90s, you fucktards. It's a complete different. The market is. So here, I'm gonna give you the basic, honest, everyday from a guy who's been doing this for over 20 years. I am a mortgage broker. I own the company. I am the guy who's been doing this for such a long time. Besides the fact that I own the company, fuck that. That's just stupid. That's like, me. Like, don't make that seem like it's more than what it has to be. I've done over $1 billion in total real estate transactions. These people, if they're doing, their real estate agents are sitting there with like their 1, 2, 3 total transactions in the course of the year. Don't listen to those idiots. The real estate market as a whole right now is not doing hot. It doesn't take a genius to figure that out. You don't have to be, oh, you know what, it's always a great time to buy. You know what, home prices are steadily going to increase. Oh yeah, well tell the fucking home prices right now that they're steadily increasing, because everything is decreasing. The only thing that has a slightly increased is over on the northeast part of the United States, but everything on the western side of the United States, south and the northwest, has all taken a dump. Numbers are numbers, you can't lie. So always try to see, whenever you're dealing with people, especially real estate agents, are they actually being honest with me, or are they just trying to see if they could go out and get their next commission check? I don't give a shit about the money. I don't care, because if I'm not helping my clients out, which majority of my clients end up being my friends, I hang out with them, we go have a few drinks, watch UFC fights or whatever it is. If that person is not taking care of your money, your bank account, make sure that you save as much money as you possibly can in the course of purchasing real estate, whether you buy now or you buy in a year from now. Me personally, anybody who comes up to me, I always tell them the same exact thing. Omar, do you think that I should go out and buy right now? I always tell every single person the same thing. Well, if you want to buy and you really want to get into it, I'll help you out. Of course, we give up to 50% commission rebate, which will help you out on purchasing your house, closing costs, go buy yourself some furniture, this and that. 0% listing on selling your house. Now, we do make money off of that. That's just something different. We do it based off of, I'll get into that in another video, or just give me a call, I'll explain it to you. And mortgaging products, our rates are better than anybody. I'll go ahead and at the end of this, I'll flash rates from big banks and see how I compare versus everybody else. I'll go into the lending tree. Now these are not going to be like based off of just fake numbers. These are actual numbers. These are exactly where we're at. So what we're going to go ahead and do is we're going to go ahead and price out not five different mortgage products. 1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 mortgaging products, okay? Because I did 5 mortgaging products before, and I did like a year, a day, like how much it was before, blah, 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 blah. But what I'm gonna do is I'm gonna go ahead and do these, what it was previous market date versus today. So a 30-year fixed conventional, and these are all based off of $400,000 loans. So anything that goes higher will be a lot different. Anything that goes lower could be different, vice versa. But we're basing all of these off of 20% down, $400,000 loans, purchase price at $500,000. 30-year fix will be sitting at 4.85% as of today. That is a decrease from 4.88 yesterday. 15-year fix will be sitting at 4.08%, which is decreased from 4.13 yesterday. 5.55 on a 30-year jumbo, which will be less than the 5.63 yesterday. The DSCR loan. So DSCR loan is actually called the debt service covered ratio loan. This is for people who are investors. Debt service covered ratio is a no income, no asset type of loan. You don't need any money for it. Well, the only thing that we are concerned about is does the debt that you're about to acquire, which in turn is going to be your mortgage, principal, interest, taxes, insurance, going to cover what is going to be servicing, which is your service, which is the rental income coming in. So if that's covering it, then that's what a debt service covered ratio is. Debt service covered ratio will be sitting at 8.5%, no change from previous market day. Bank statement loans will be sitting at 7.45%, which is a decrease from 7.5 yesterday. FHA 30-year will be sitting at 4.2%. That is a little bit less than the 4.25 from yesterday. 7/6 adjustable rate mortgage, SOFR. That'll be sitting at 4.98% from the 5% from yesterday. 4.20% from the USDA 30-year fixed, which will be a slight decrease from the 4.25 yesterday. VA 30-year fixed will be sitting at 4.85%. That is a slight decrease from the 4.88 previous market day. And then the last one will be the 10/6 SOFR. That'll be 5.30%. Slight tick less than the 5.38 from yesterday. Now, adjustable rate mortgages, as far as the 10/6s and the 5/1s and the 10/1s, 15/1s, whatever it is, as far as the adjustable rate mortgages, which has taken a huge uptick because the cost of purchasing that has been so low. The 10 is going to be the amount that your interest rate is going to stay fixed. So for instance, let's take an example, 10/1, okay? So if you had a 10/1 adjustable rate mortgage, your interest will stay interest only fixed for those 10 years. Then after the 10 years have concluded, then it gets adjusted every single year to the rate and the cap on your product. So if majority of products, they'll have like a 1% cap on your product. So even though if you bought in at, let's say, 2%, right? At the lowest it's ever been, at like 2% you bought in. And then interest rates steadily increase and it went to like 8%, right? Well, you're not gonna go straight to 8%. You're gonna go ahead and go to 3%. Then the following year, you're gonna go to 4%. Then the following year, you're gonna go to 5% until it gets adjusted to the rate in the market, right? So that also goes into retrospect. So like we priced out let's take an example, the 7/6. That stays interest only fixed for 7 years. Then it gets adjusted every 6 months after that. Now there are two different places that we get our rates from. One is LIBOR, one is SOFR, secured overnight financing rate. Of course, I'm gonna make a different video on that. SOFR, that's here in the United States. We got that all dialed in. We don't go to the London index, but they give us better rates. So that's why we do it. So up to 50% commission rebate, 0% listing on selling your current home or any mortgaging assistance. Let me beat your big bank, because that's what we're here for. We're trying to go ahead and give you the best rate. And if you do have a rate or you have something that's open with whatever lender that you have, give us a call. Let us at least try to beat it and help you guys out in any way that we can see fit. I know these videos are like a big advertisement thing, but I mean, some way you got to go ahead and get this information out there. Until next video, guys, I really appreciate you watching. Like, subscribe, comment, all that other good stuff. Peace. Oh, totally forgot. So I promised that I would go ahead and put my rates up against every single other person's rates, okay? So whether it's a lending tree, which has a cumulative of a bunch of different mortgaging companies, or you have like your JP Morgan Chase or your Bank of America and Wells Fargo, now, by all means, everybody's awesome. Majority of these companies are great, except for those internet tech companies. I don't like those guys. I'm totally against those. I like the person-to-person type of thing. But here is gonna be JP Morgan Chase. I'm gonna go ahead and flash that guy up there. that's just the rates that they have. Wells Fargo is up there. I'm gonna go ahead and scroll through some lending tree stuff. You can see what everybody else rates are. So we're respectively really, really good. You know, we're trying to go ahead and take on these big banks and try to do the best that we can. So there you go. Hope you liked the video.